another episode of Candlestick Patterns. Today we are going to learn about a candlestick pattern called Bullish Harami. If you can see here, there is a big red candle and a small green candle that is completely engulfed by the red candle is formed. This is called a Bullish Harami. A few things that you need to take care. First, that it should form in a downtrend. If it forms in an uptrend, you should probably ignore it. Next, when do you take an entry? You take an entry when in the next 2 or 3 candles, a green candle closes above the high of the red candle. That is when you take an entry. Your target would be the first or the next resistance in the next 10 to 15 candles. Your stop loss would be the low of the red candle, that is right here. I will show you an example. This is a chart of ACC. If you can see, there is a bullish harami being formed here. So you can see there is a clear downtrend and a bullish harami is formed. And if you can see, the bullish harami was formed around 1440s and you could have taken an entry around 1470s, and the price went up till 1560, which is good enough. That's almost 100 rupees profit. So that is bullish harami for you. I will see you in the next video with another candlestick pattern. Keep watching. Cheers.